M&A TV is pleased to welcome Crispin Goldsmith, who's an investment director at Duke Street. Welcome, Mr. Goldsmith. I suppose the sort of questions that investment directors normally get asked are, okay, well, what do you invest in? But rather than give me a stock answer or about sectors, I mean, how do you really go about the process of choosing the companies that are appropriate for your portfolio?
Yeah, I think Duke Street's always had a approach of trying to get really deep into the detail of sectors, of industries, of businesses, and very much looking at a bottom-up way of origination. So rather than identifying sectors and taking a blanket approach, really trying to get more of a fundamental thesis from a bottom-up basis. And I think particularly that's the case now where, yeah, as we were discussing earlier, there's a lot of risks out there, both for the UK market, uncertainties around the election next year, and also in Europe, what happens to the UK market, for example, if Europe stagnates. So I think there are sectors which are most sectors have issues facing them. The ones that are more positive, prices are very high and there's a lot of competition for the assets. So for us it works a lot better to really work more on a case-by-case basis, to look at potentially unloved sectors. We closed a deal over the summer in the healthcare space where competition for the asset was much more restricted. And like I say, really trying to identify those assets that make sense on an individual basis rather than necessarily from a wider sector view.
I see. Is your search for investee companies British, European, global?
Yeah, 90% of our efforts are in the UK market. We have a strategic investment from Tikio, which is a French credit manager, which is growing very rapidly. They give us a window onto Europe, so we do look at deals within Europe, mostly Northern Europe. Not really beyond that. I mean, there are certain sectors where insurance is one where the business might be domiciled in Bermuda, for example, or somewhere like that, where we would be happy to look. But fundamentally, we're looking for Northern European-based businesses. But if you think of our target investment size as 50+ million of equity, we go a little bit below that, but that sort of region you're talking about, let's say 150 million, 200 million pound EV firms. So most of those businesses are going to have, or a lot of those businesses are going to have more international operations as well.
Right. In the panel discussion earlier, there was a view expressed that because of economic stagnation, people are sticking with their assets, with their companies, with their brands, happy to take the income that coming in rather than maybe selling them off or even expanding them. Is that true from where you sit, and is it a bit of a block, a bind on you finding investee companies? Yeah,
I think it's been a long-term theme actually that in various different sectors of relatively benign debt environment, low interest rates, cov-like deals in the past and so on, meaning that the spur for disposals for larger corporates hasn't necessarily been there so far. And not just larger corporates, but privately held businesses as well. And Andy in the panel spoke about the tax issues that private entrepreneurs can find if they sell companies. So that's certainly true. I think also with public market valuations being high, I think that's added to the challenge. Perversely, it's possibly easier for corporates to dispose of non-core assets if their valuation is lower, because otherwise it makes it easier for them to do an exit without it being diluted. So I think that's definitely been an issue, and possibly one of the reasons why that non-core element of corporate disposals hasn't been a big feature in the European market so far.
So, briefly, are you an optimist in thinking ahead over the next 12, 24 months? considering all of the sort of factors that you've alluded to so far?
I wouldn't say I'm an optimist. I think, but I don't think things have been pumped up in in the real economy. And I mean, I think about trading in our portfolio companies. Trading is solid, but it hasn't been racing away. So I think the foundations are there for stable growth. So I'm not a pessimist from that point of view. But I do think valuations price in a lot of upside potential without necessarily recognising the downside risk, not potentially recognising the execution risk on the business plan, not necessarily recognising the risk of multiple contraction on exit, and all of those factors makes me more pessimistic about opportunities to deploy capital. So I think from a general economy point. There are uncertainties, as we've talked about, but I wouldn't say I'm negative. But it comes back to my points about looking at things very much on a case-by-case basis, looking at the opportunities where you can buy in at a sensible valuation, you can protect your downside as a result of that, and you can, like I say, hopefully benefit from long-term, gradual, stable growth rather than a real spike in recovery.
Crispin Goldsmith, thank you very much for speaking to M&A TV.